Going to start off this morning on the crude as normal and see where we are on the big crude here. All right. Okay, yesterday we had a small pullback on the crude. So if we take a quick look down here on the current daily cycle, delete. The range of the market that we're looking at is here. So we're watching this range of the market. We're going to be keeping an eye on this range of the market throughout the course of the week. And with that range, we've closed our first 2 days below. So we've closed below the open cycle range, and we've closed our first 2 days below the NinjaTrader 8 version open price line. Again, I'm still wrapping my head around how this is going to work because they are not the same. Ninja 8 and Ninja 7 calculate differently on daily bars, and there's nothing that you can do about it. So, for now, we're still watching the Ninja 7 range until I do some more research and figure out if this one's going to work or if we're going to keep doing it this way. Otherwise, we'll get an indicator built that does this for us, applied to our daily cycles at some point. So we're looking ahead this morning. We've closed our first 2 days below the controlling bar range. We are expecting to continue to remain short. I'm looking for consolidation here. If we look back left, we can see that we are retesting this major low. So the market broke this low. So by piercing that low, I never thought we were going to get below there, honestly. I thought we were going to hit that major swing low and consolidate, and we blew it. So when the market blew through that low, well, now we're looking to the one before. So now we're back into this one, and the market has closed right at it. So we have taken out one major low, now two major lows, technically three, I guess you'd say. This was a minor low, wasn't a huge pullback, only a couple of days and the push back up. These two were fairly major. So they were the two most prominent pullbacks that we had seen in several months. And again, we have now at least attacked the second one. So the first one blew right through it. The second one, the market has stalled, and we are sitting at this 61.50 mark on the crude. The next major low below us is quite a bit further down. It's all the way back into the 56s. So if the market were to get back down to this range, somebody's going to be upset. So if the market starts to get back into this range, we will see some very upset people because, why would they be upset? Glad you asked. We would be upset because, that was unfortunate. Ninja 8 doesn't let me do that, does it? Because anything below $60 a barrel, and all the fracking guys and most of the guys in Canada start losing money. So that $60 a barrel mark is a very crucial level for a lot of refiners and for a lot of drillers. So if we were to come back down and retest this prior low, this one will take us all the way back to the beginning of the year, really close to the beginning of where crude started on the year. And again, below that would be below the $60 a barrel mark. So I got a feeling they're going to try to hold $60 a barrel pretty tightly. I don't think anybody's going to be giving up anything below 60. So we'll see how they go. We're back in the 61.71. Again, we did close yesterday below, giving us an indication that we will continue to trend lower or consolidate on this support level of 61.53. So I think we're going to see support coming in there, or major consolidation anyway. For the next, we've still got, what, 5 or 6 days now. So we had a day trade on it yesterday. We did not have a day trade because we opened an inside bar. But coming into yesterday, yeah. So we did close lower, and we have 6 more days. So we're expected to stay down for the next 5 or 6 days. Pattern 4. And now let's look at this over on this current daily chart. We have got a pattern 4, and we have a pattern 4 2 bars in a row, technically all 3. So I'm going to draw a small window around our pattern 4, and we do have a pattern 4 here. 1, 2, all 3 of these days ended up forming pattern 4s. So let's mark that on the chart here below it as well. So we had a 4 there. We had, not there, actually it was here. So we had a pattern 4, and then we had another pattern 4. Those should have been pullbacks. And then yesterday we popped a brand new low. And yesterday was the last ditch opportunity based on the patterns for this market to give a pullback. And, well, it's not really done much. Yesterday, we did see a little rally back up in the morning and then only to drop it back into the later morning, early afternoon. So we have pattern fours forming here on the crude, a breach of the low. Now that we have pattern fours in place, a breach of 61.17. So anything below 61.17 and this market will fall. So we go below 61.17 today, and we are likely to see a reattack of this $56 mark. That's a long way down. So crude took us a year to get up into that heavy controlling bar range. I'll eventually draw that back on our chart up into the 76.50s, and took us 3 weeks to get, well, halfway, most of the year back. We're at the same price level now that we were back in January. So we're back into January 9th prices. So we've given up, crude has given up the entire year of gains and now back into January's prices. So we'll watch and see where it goes from here. Pattern fours in the market, pattern four indicative of a pullback up. We are below the moving average, and we will see today where the market goes. So if the market, again, we could get a pullback up here, very possible. However, we are below the moving average, and it would be counter trend if the market puts in anything lower than. So today, if we see a print, let's look at the low of that candle. The low of that candle, 61.20. If we see a print today below 61.20, then we will probably, very high probability, we will continue down for the next week. So we're right on the edge of that as we speak. So 61, what did I say that was, 19? 61.19. We're going down on the crude. So let's look down to the 60-minute. I threw a 60 on here just for reference and getting an idea of where we are on the 60-minute power zone, which apparently goes forever. In fact, yeah. Let's see if I can get any more out of it into the future. I don't know if I can. But maybe. Let's go out a little bit more there. Maybe it'll give us a little something extra. Nope. We still have no crossover. So this 60-minute power zone, which came to be out of a chop zone, gosh, when was that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days ago. So we came through a chop zone 15 days ago. And as we exited the chop zone 15 days ago, the underlying trend was expected to be down. So, wow. So we came through the chop zone 15 days ago. And as of right now, it looks as though our next projected turn time is 1, 2, 3, 4, 5 more days. So it looks like right this moment we have 5 more days of, I'm going to put a vertical line on the chart here. Looks like we have 5 more days of downward momentum that we're expecting, and we may move that line because this won't be locked in until the histogram crosses back over 0. But right now, that's the lowest point of the histogram. So it looks like we have 5 more days in this move where we are expecting the underlying trend to continue moving down. So the 60, no question about it, it's saying let's go short. So 60-minute way on the short side. And we've been short since that open price line was forever ago. Off the chop zone, the OPL, what was the actual open price line? Because it's going to come back. I mean, to look here, it is going to come back in to play right there. I thought it was, I don't know why it didn't print, but it should have. So let's cast this line forward. So this price level, we'll cast that sucker forward right there. Ding. Nope. That's the ruler tool. Used the wrong button. All right. So right there, close of the bar, first bar out of the chop zone. That's the one. So we are looking for resistance, heavy resistance, come back in the market right there, 69.22 or 69.19 rather. And let's put a big red on that one, as that is a chop zone OPL. We're going to make it a 3, apply. There we go. So that's a chop zone open price line. The expectation was as we came out of that we would move lower on the 60. And for all intents and purposes, as long as we are below that open price line, well, we're going to go down. So we're favoring the short below that sucker. Let me tweak it just a little. Get it out here where I can control it. There we go, right along in there. So 69.21 is our current 60-minute open price line. Obviously, we're well below that price level, and I'm going to take that one forward for a while. So as long as we're below here, the 60 says short. So 60 minutes says short as long as we're below that. Oh, no, it's okay, Lee. We'll go back to that. I was just looking for the majors. The two minor swings, they will definitely count as support. I was simply looking for the biggest levels at the moment. So let's go back to that chart for a second. So 60 saying down, and 60 says down for at least another week. So we're at least another week to the downside here on the 60. So I don't see any pullback in that one's future. Let's drop back to the daily for a second. And we had the major swings. All I was looking at on these will definitely count as some support for the market. I was just looking at the ones that had the major pullbacks. That was all. So I was just simply looking at where these occurred. So we can see at the pullback areas here, and I was just doing a visual on it, but I'll pull a line and let's take a quick look at the line and see. Let's do a copy, CV, and if I put this line here, again, it's about the same pullback distance. And if I do the same thing again, it's about the same pullback distance. That one may be a little bit further. So I was looking at the areas where the market had made a fairly significant, consistent pullback. And we obviously have the smaller ones. There are definitely some smaller ones in here. But I was just trying to eyeball where the more major pullbacks had occurred. And again, this one we have a little bit more on the chart. So with here, it pulled back that much more. This one didn't pull back as much. So this one a little bit different. And then this one was the litmus test. So again, I'm just looking for where there are consistent areas where the market has made consistent pullbacks. And when it hits those areas, I expect that to be major support for the market. And these are the majors. So when we're looking back across the chart, I like to see where the market made a big pullback, just like when we're pushing higher. The minor ones, they don't concern me as much because they never were like a new low. So they were never really reattacking other lows. So they were more like a glorified consolidation, if you would. Doesn't mean they're not going to be valid, but when we take out any kind of a prior structure, and if I'm looking over on the chart with this one, with this major pullback, we took out structure here. So the structure was, whoops, that's not the one I wanted. I wanted this one. When we made the pullback, we took out structure here. When we made this pullback, let's look at it a little closer. When we made this pullback, we really didn't take out any structure. So the market just kind of waffled around in this area before it pushed higher. When we came into this next pullback, let's mark them on the chart. So this one really didn't take out anything new. It just kind of pulled back, but there was no really, it didn't put any new or lower level. When this one made a pullback, same thing. It pulled down, but it didn't take out the level below it. When this one pulled back, same thing. Kind of sideways run, not really a heavy pullback, and still did not take out the prior swing low or any kind of prior low. When this one pulled back, this one took out this price level. So when we took that one out, we breached here. So by coming below there, this became a more significant retracement to me. The same here. When the market came up, when we came back down, the first one, not so much. But when the market did it the second time, that's why I drew that extra box. This level now took out this one. So it gives it a little bit more significance to me because they were strong enough moves to test lower lows in an uptrend. Does that make sense? So when the market still takes out these lower lows and then goes back up, then these levels tend to become really significant. So when you see these lower lows taken out, The market really respects them when the market comes back to them again, typically. Now, I wish I could say that was true for every single one, but it's really, obviously there's not. But that's what I look for on the chart. So I look for these minor waves, and then I look for the majors, the ones that really come back and really make significant moves. That's why when we talked about last week, I never thought, well, I say I never thought, I really did not expect that the market would get below here. I really didn't. Now, and if you remember last week, we were on the Ninja 7 version then. I can go back and pull the chart up. But I said then we have this minor level, and we talked about a week or so ago, if we shouldn't get below here. And I said last week, if we get below here, we're in trouble as far as the market goes. So when the market got below there, I was treating this one the same way as I would have been treating this one. So these two would have been the same. So here we had a minor level. Here we had a minor level. Push up above it. When the market breached that minor level, then this pullback was going to become more significant. It was going to be in the same category as this one and this one and this one. However, this one's the biggest one we've seen in over a year and a half. And now we've not only breached the minor level, we've also breached the major level. So we've taken out a minor and a major, and we're retesting another major, which is the reason if we break through here, I think we're probably going to see a return back into this price. So I think if we start seeing candles closing below 61.52, we will probably see the market come back into taking out 56, or at least come back and bounce off of it. Does that make sense? So again, that's the way I see a chart. So I see a chart based on trends, and then trends being broken. Good deal. Lee was asking the question, but usually if one person asks, or somebody else has got a question and they just don't want to ask. Does that make sense to everybody as to how I read a chart? Anybody completely confused on why I did what I just did? Sweet. Good deal. All right. So let's move this puppy on. So today the 60 says, we're going down. So we are still down on the 60 for the next week. And obviously we're still below the moving average. We haven't even retested the moving average on the 60 in a week. The last time we even got close to the MA, we got close to the moving average. When was that? Back on the 31st of October. So we got close to it there, which was a week ago, 8 days ago. And we haven't seen the moving average again since. So that one's just, yeah, no love there. So definitely looking for the shorts here over on the 60. We're into another sell now. We are not at new structural lows. So the sell that we're into right now over on the time warp until 1 o'clock this afternoon, we are going to be favoring the short even off the time warp. Again, the market pulled up, small pullback down. It is not new structural low. New structural low would have to be below here. We've already closed our first bar, so it is not a pattern 4. It is a pattern 2. And we will be looking for shorts on down into possibly retesting and putting in new lows below 61.20. Remember, a print of 61.19 over on the daily puts the daily short off that pattern 4 breach into next Tuesday. Let's drop down to a 30. See if the 30 cleans this up at all. Okay, so the 30, we had the buy signal that came in there yesterday. We saw a hard push down after the econ, and the 30 inverted. 1, 2. Well, we closed one bar below. Man, it was right on the edge. It looks a lot like it's going to do it, though. Looking over to the 30, let's go ahead and get rid of a line or two here so they don't get too awful messed up. The 30-minute open price line is this dashed yellow line. And we had the buy signal on the 30 coming in. When was that? This was 1 o'clock on Tuesday, Monday, Tuesday. Well, anyway, the 6th, whenever the 6th was, 2 days ago. So we had the 30-minute on that one. Gave us a buy. The market gave a small push back up. That was that last swing. We saw the market consolidating. The open price line held. Coming into yesterday, that was actually, that was Tuesday afternoon. Coming into yesterday, there's the econ drop. So off the econ drop, the market pushed down, and we managed to close a bar below the prior swing low. So this prior swing low, which was in place, we always watch the prior swing high and the prior swing low. So right there was the range of the market coming into that 30-minute buy signal. And the market pushed up into yesterday morning early. We got close to the top of the range. We were not able to breach the top of the range. And then we saw the rollback down. When we had this rollback down, it was big news because it closed below the bottom of the range. So by closing below here, that gave us an indication that, this zone that we're in is likely to invert. That simply means that we're probably going to now move short. So the 30 counter trend move off the bottoms, we had a valiant pull back up. The market has now pierced the bottom. We have closed 2 bars below the open price line and the physical location of the dot. We've only closed 1. So we've closed 2 below the dot. We've closed 1 below the prior swing low. 1 candle closing below 61.20. What is that price? 1 candle closing below 61.31 on the 30-minute chart, and we will be inverted. Again, it's the same area for the daily. So the daily pattern 4 is looking at really close. Anything below the lows here, we're gone. There's just no support for a while. I mean, obviously there is at some point, but there's some room there. So anything going below here, we will likely see this market fall. Let's see where the market's going to go. So we're on the edge of the short. We're right now below the open price line on the 30, and I'm expecting we're probably going to see a pierce today. So we'll probably see a pierce of the low, and then we'll be watching for shorts. So again, the 30 is just, it's so close, it's scary. It needs to close 1 bar by the letter of the law. It needs to close 1 bar below 61.31. And if it does that, we're gone. We've already closed 1. The law says we have to close 2. And again, we closed the first one down, small pull back up, and now it's just not maintaining. It's falling right back down. So 30, I'm still thinking we're going to roll back over to the short side. So 30 on the edge of being short. Let's go to the 15. 15, if we're looking at our 15, what do we see today? All right, on the 15-minute, we're in a chop zone right now, and we're going to be in this chop zone until 10 o'clock, actually 9:30. Coming out of the chop zone at 9:30 this morning. So we're going to come out at 9:30 into 10:15, 10:15 back down into 12:30. So we are going to be in the chop zone. We're coming into it in the next few minutes. No trend movement is expected through there. We might get something, but it's just, again, it's not been a time where historically the market has on the 15-minute chart. So we'll continue to watch and see where we go. So right now, 15 telling us that, we don't really have much of a trend coming up for the next 45 minutes to an hour. And then we will watch for a little move up in a 10:15 and 10:15 down in a 12:30. 30-minute says after 12:30 today, we should see some kind of a pullback up into the afternoon. So it says we should see a move back up into 12 o'clock tomorrow. Interesting. So we get a 23-hour and 30-minute move is expected after 12:30 today. So 12:30 today, mark that on your charts. That will be the time to reference for the new trend move leading into tomorrow morning. So we'll reference the price and see where the market is structure-wise at 12:30. For now, the market, we had the buy signal, and this one stayed above the entire time. This one came in at 4:15 yesterday, or 4:45. Into the overnight, the market has pushed higher. We are now back into retesting the open price line. The 15 says we should have been long from 4:15 yesterday, and the market did stay back up in the overnight, and now we are ending the zone. So that particular zone is over at the close of this bar in 3 minutes. And then we have nothing for the next, hour. So 15 not really being helpful here for the next hour or so, not until 10:15. 10:15, we are going to be looking for a move down that will be in agreement with the daily and probably the 60 at then. Let's look down to the 3-minute and see what our 3 gives us today. All right, our 3-minute, where are we right now? Right now, the 3-minute, all right, we came out of a chop zone this morning here, and the expectation was we would move up in a 10:03. If if I take this line to the top like it's supposed to be, well, that goes to right there. You reckon we faded the chop zone exit? Same thing here. We had one right there. This one, the market moved. We came out of the chop zone, and the market moved in the expected direction. So we were looking for a move up into 339, and we got that. Off 339, we were looking for a pullback. We did not get that. So we blew through the 339 signal, and the market pushed higher into its highest high in a while as we came into the chop zone exit. We exited the chop zone this morning at 357. We had a 60% chance we would push higher after that, a 40% that we would pull down into 1003. The market has obviously taken the 40% side. The time of day for the reversal was within 1 bar. So we pushed up this morning. This would have been a perfect fade move. We always look to see if we can identify clearly the direction coming into the exit of a chop zone. If we can do that, then we will look for a fade in the opposite way, and this one never looked back. So this one had a really clean little fade opportunity out there, very counter trend on this chart. This would have been with the trend on some others, and the market came up, little fade counter trend move, and it never looked back. Timing was spot on. So the timing indicator picked it up perfect right there. The trend will likely be down now. We did have a prior swing high and a prior swing low coming in there, and off the prior high and prior low, well, we were at the high, so we had nothing else to go by. So the market was sitting right at the high. The low was here. It took a little while to get there, but we did breach the low. Once we breached the low, we saw an immediate punch through, small pullback, continuation down, and anything below 61.62, it was going to be on down. No looking back. Yeah. If the market should pull back up, this 3-minute open price line, let me cast this thing forward. I don't know why it's not casting itself forward. I may have to. Programmer is working on this tool. I'm getting excited because you're getting so much closer. Give me 1 second. Open price line. Yeah, it's supposed to be on until the next signal. I don't know why it's not working at the moment, but because it ought to be out there. Let's go to 3 or 4 or something crazy. Just see. Okay, now it came on. I don't know. It needed to be reset. Had to hard boot it. So there's our open price line. Nice. So 62.39. And if we come back into that price level, most likely we will bounce off of that sucker. So we'll see how the market reacts from there. 10:03 this morning. That correlates fairly closely to the 15. We're going to be watching for the move lower into 11:51. So watch for the move down into 11:51. 11:51 this morning. This one shows us the 3-minute says we should get a pullback until 2 o'clock tomorrow morning. So that's pretty significant. 11:51 today. Watch for a pullback up into almost 3 o'clock tomorrow morning over on the 3. So there may be some divergence here between the 3 and some of the higher time frames. But we'll watch 10:03 today. So 10:03 is our next major turn time on the 3-minute chart. Looking over onto our warp chart this morning, see where we are right now. So we're inverted, so we're favoring shorts across the board. We just had a pattern 4. So the market pulled down into a lower low, barely popping that lower low. And I tell you what, right now, I actually have a trade set up. If we breach the low here, if this market breaches the low, we have a pattern 4. It's a lower low sell. I'm looking for things that are happening in the direction of the trend. And this market has pulled back up off of that lower low sell. We've pulled back up a couple of bars. If we breach the low, now that we are beyond that sell, I need this bar to close, don't I? If we breach the below beyond there, then we're going to watch for the push on down. All right, so let's see where we're going to be. So 3-minute, looking for that move down. What's going on with this chart? So looking over this morning to boogity, and there's a pattern 4 that formed here as well. So yeah, right now the only trade I do have a breakout trade, sure enough. So yeah, if the market reaches 61.50, she's likely to fall. So we'll be watching for that one over on the 3-minute. Okay, breakout trade short. Let's drop that chart back down, and we'll see where the market takes us. Let's look over to the NASDAQ this morning. And on the NQ, okay, and on to the NASDAQ. Let's look at the NASDAQ. I don't need to see the chart trader up there. Hit in. All right, so looking at the NQ today on the daily. Hold on 1 second, guys. Okay, so we came in yesterday. The controlling bar range that we were watching was actually here, right there. So let's see where we're going to end up being to right there. So yesterday we obviously pushed up. Nice day, nice move on the day trade. So we're going to be favoring the longs. We pushed all the way back into the moving average and coming all the way back into the moving average there. We're going to watch and see where we end up going from here. So yesterday, nice hard pull up, closing the bar high. Moving average retest. We're obviously closed well above the open price line, well above the controlling bar range. Let's see if this market's going to continue to push higher. So the daily, we're back into testing the EMA, and by being back into testing the EMA, we are going to see now if this market has enough momentum to get above it. We'd have resistance coming back in at 73.13, and that's a minor swing, but it is a Orion signal. And then we also have just above that, we have an untested daily open price line. So we have an untested level coming in at 73.93 and a quarter. We'll see where the market goes from there. Boing and kaboinga. All right. Okay, so let's see where we're going to end up going. So looking for longs on the daily. Actual current price says we're still down. Major move up yesterday. Today we will see if we continue this move up. We have had 2 solid bull days just below the moving average. So let's see where we're going to end up going from here. Dong, 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 dong. So looking for long on the daily. Looking down to the 60. Let's see what the 60 says today. Oof. The 60 says, oh my goodness. So looking to the 60. All right, we had a power zone buy coming in last night, pattern 5. So we had a power zone buy with a pattern 5. The market pushed higher coming into the buy dot. From there, we have seen a pullback down. And tell you what, the 60 is not really saying the same thing. Off this pattern 5, We did get a small breach of the pattern 5, and the market shot straight down below it. The open price line, which should have been support for the market, is giving us significant resistance right now. So the open price line, which should have been support, we have resistance coming back in. Let's turn on my drawing tools right there. And again, resistance coming back into the market here, 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 here. So yeah, here. So we should have had support off this level, and we've had resistance. So the 60 is not necessarily in agreement right now with the daily. The 60 says we should see a small pullback down here until 5 o'clock this afternoon. We have been moving lower since 7 o'clock last night. If the market pushes up at this point, and if we should breach the high, then that will, of course, be back in phase. So we're actually technically still in phase, just I have some concerns because we've not been able to close bars more than one above this price level. So 60 is consolidating here at the moment. We have not gone below the prior swing low. So the prior swing low here has not been taken out. Obviously, there's the high, there's the low, and the high has been tested, not reached. So just kind of hanging out there right at the close of day. 60 is consolidating. Actually, technically, it is still favoring the long. So it is still long, but we are on a pullback, and we are seeing resistance where we should see support. So it will not actually have a short area on it unless we breach 70.57.50. So we'll see how that one ends up going. 70.57.50 is going to be the one. All right. So let's see where the 60 is going to take us. 60 says long. Daily says long. Let's look at the 15. Looking on to the 15, pull that back. And this morning, 9:30. So on the 15, we've had kind of a mixed bag for the last little while. We've had a sell, a buy, a sell, blah, 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 chop zone in the middle, ugly area. 9:30 this morning off the New York Open. From the New York Open, we are looking for the push higher into 6 o'clock or 4 o'clock this afternoon. So the 15 says, yeah, let's pull it back down a little bit. And the 15 says 9:30, here we go. We're going to look for a launch. So 9:30, we may be on a bottom here. We'll see where the market is. When we come into 9:30, we are looking for a punch up into 4 o'clock this afternoon. 4 o'clock this afternoon on the 15 gets consolidated down 445, up until 5, down into 630. Yuck. After 6:30 tonight, we are looking to be higher into 245 tomorrow morning. So for the day today, we are currently sitting on the open price line from the prior zone at 745. Off of that sell, the market is kind of hanging out here. And then as we come into 9:30, we are expecting to see this market give us a push up. So the 15 saying long starting at 9:30. Let's look down to the 1. See the big 1. All right, and let me restart this chart. Okay. There you go. Shouldn't have been that hard. Give it a second here. She's calculating. All right. Okay. So the 1 minute, we came in this morning. We were 810 off of 810. The expectation was moving lower into 849. 849, we were looking for a push back up into 933. So we came into the 849 signal. The market has pushed higher. We are now breaching the trend stalker. So the trend stalker is just now rolling over. We are back above the 120 moving average. The 1 minute says, yeah, let's go up. It says starting at 849, we're looking for the move up into the New York Open. 933, it gets ugly. 936, 938, back down to 945, single bar crossover, 949, ugh. So from 933 and a 949 this morning is back and forth. It's really not pretty. After that, we do see 949. We're going to be looking for a push up into 1045, and off of 1045 today, we're going to be looking for the sell. Let's not do that. I'm not doing that Microsoft update, and it's driving me nuts. 1045. 1045. Watch for the underlying move. Check this one out. 1045. We see the move down. Notice we pull back up into almost the same level here. It's almost like a short-term double top. Let's watch for the more major move to occur at 1130, back down into the 1223 signal. So oftentimes when you see these on the histogram and it's almost too close to call, they're the same height, watch the second one for the major part of the move. So we'll watch for that second one this morning. 1233, back up, little messy stuff there. 1231, up into 102, 102 down to 113. 113, back up into 251. Dun, 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 dun. All right, 251, back down to 353, 4 o'clock. Yeah, closing her out. So 251, watch for the move lower. The majority of the day looks like we are looking for longs here over on the 1 minute chart. We do see some of this messy stuff happening at 1045. But other than that, 1045 back up and then back down. But then again, most of the afternoon is higher up in a 251. So we're going to be favoring back and forth today. It looks like from 919 to 1045. That's most of the morning. And then we get about 45 minutes back down on the other side. So we'll see how the market reacts. So not a horrible looking day. It could be a lot worse for sure. And looking over onto the NQ 1 minute today. Let's see what our 1 minute NASDAQ holds for us. All right. ATR still kind of high for this time of morning. We're running around $3 a minute. Power Zone says long. And yeah, Power Zone says we are on the long side right now into the New York Open, 930. We will actually have a Trend Stalker Hail Mary at 71.75. So 71.75. We have a Trend Stalker Hail Mary coming in right there. And let's see if we're going to pull down. Coming into a sell now, not a pattern 4. Watch for the move down to 903. 903, we'll see if we pull back up here. So, yeah, we'll watch the NQ closely. So most of the NQ is pointing up for the day, where most of the crude is pointing down for the day. He's kind of all over the place. We did not get our breakout trade short on the crude. There's the New York Open. They're pulling it up slightly here off the open. You know what? Give me a short. Oh, come on. That's a horrible fill, but I'm going to take it. That's about the max risk that I'd give it to. So looking for a short here. We pulled up into the moving average on the 1 minute. I have a 1 minute time warp sell at the moving average retest. I have a horrible fill because I didn't get there quite in time. So I am still favoring the shorts here, and I'm looking for a move back down. Let's see if we can get us a little something to get our morning started off the right way. So we had a little lunge up over on the crude. Again, everything else on crude is pointing down. I should have been already up 15 or 18 cents in this trade. You know what? Give me 10 cents. All right, I'm going to get my 10 cents to start my day off. We'll get a quick $100 off the word go. If it drops lower, it drops lower, but I'm going to get my $100. And because, again, I should have been up here at 74, and I got filled instead of 67. So I grabbed $100 off the crude. Nice little move down, coming in right there at the sell in agreement with the 3. Again, 3, we're still below. We didn't quite get that breakout trade yet, but the breakout trade is still on the table. We just had to pull back up into, again, into that 1. So nice little move there. I should have been short right there. 73 would have been the perfect fill and not 67. So, nice little move down, though. We got a little pierce of the swing low, barely. And back onto our 3 and 3 minute power zone. See where we're at. Yeah, we're still down. We're down until 10:03. So we're favoring the shorts until 10:03. We tested the prior swing low. We did not break below it just now. And if this market breaches that low, she's going to fall. So pretty significant little run there. Let's go ahead and get us another one set, and we'll let it sit there and soak. We might get another opportunity on this short. So we had to move down, got a quick $100 out of it, pulled all the way back up just about to the entry again. And now if they punch this low, yeah, I think if we punch this low, we're going to move on down. Doing, doing, doing. It's 2 bars after. Yeah, we should punch the low. How about that? Until 9:07, which we got 5 minutes. So we should pop the low. And we are right at the daily low too, aren't we? Yes, we are. We're in the chop zone. And there's that 30. No, we're not quite to the daily. That daily low is 61.17. So 61.17, there's the number. Again, if we pop 61.17, we are going down, down, down. We are currently below the open price line over on the 30 as well. So everything is still really pointing to the downside here on the crude. See if we're going to get a breakout short based on the 3 and the 1. If we pop the level, it should pop it and go quickly. So treating this like a game on breakout is what we're doing here. Okay, back up. Let's look to the ES this morning while that trade is going to sit over there and soak a little bit. And on our EAS, double syllables, triple syllables if you live south of Mason-Dixon line. All right, so the ES, we pushed back up, stopping yesterday hard. We stopped hard right on the Orion signal and finding a little resistance in the market. We are back above the 120 moving average here over on the, get that bad boy over. Okay, so we stopped hard right on the moving average. Bank, hit it, little resistance coming back in. We obviously closed our first day well above the controlling bar range. So our controlling bar range coming into here. Why did it not print? There we go. Controlling bar range coming back in the market right there. That one's going to be in control for the next week. We're obviously higher, and by being higher, we are favoring the long. So the daily on the ES says long. We are retesting the minor swing high. The next resistance level above us is going to be this open price line of 28.93 3/4. So we stopped square on this one. Let's see if the market's going to have enough momentum today to push higher than 28.22. If it does, there's not a great deal of anything in between us. So there's just not a whole lot here. So there, the ES has a fairly clear run to get back up into the 28.93s. And we'll see where it goes from there. But a nice little move there over on this one. All right, we got our breakout trade short on the crude. And there's a breakout trade short on the CL. Let's see if this market will push on down for a little bit further. There we go. Hard to go wrong with that. So $100 up in the breakout trade short. I'm not going to take a loss on it. I will lock in a few pennies here just to cover my commissions, and let's see where we're going to go. We only have a couple of minutes before the next buy anyway, so we have broken out. See if we're going to be able to get anything more out of it. Come on, market, fall on over. It's locked in, so I'm not going to worry about it. We'll let it sit and do its thing. Got 40 bucks no matter what. So on the ES, we are looking for the continuation back up. So we're favoring the long on the ES today. Let's drop over to the histos. Where are we at on the 60? All right, I'm all flat on my little crude trade. Got another 50 bucks just for good measure. All right, on the 60, 1900 hour, 7 o'clock last night. Very similar to what we saw on the NQ. We pushed up, pattern 5, higher high buy dot. It's a higher high buy time. And off of this higher high buy time, the market has been sitting very sideways. We do have a small pullback down. We have not breached the prior swing low, which is here. So there's the high, there's the low. The market has not breached the high either. It's just sat here. So we've been sitting at the high, hovering around. Still favoring the long, although we haven't really had any movement lately, until 5 o'clock this afternoon. So very similar to the NQ on that one. Sometimes they're lockstep, sometimes not so much. 5 o'clock this afternoon, look for the move down to 1 o'clock tomorrow morning, back up into the London session at 4, down into 7, up until 9, 9 down into 1. Wow, back and forth stuff on the 60. 1 o'clock tomorrow afternoon, taking us all the way into 12 o'clock Monday. So we have a lot of back and forth, not much time between several signals there tomorrow. For today, the 60 says, well, we should breach the high. And with this pattern 5 being in place, a breach, anything pushing higher than 28.18 would put us into a higher high area. So looking for the 60 above 28.18. If we look down to the 15, see if this clears it up for us any. 28.15, 424. Boing, wait a minute, what is that? Ugh. All right, on the 15, we were expecting to see the underlying trend up from 424 yesterday afternoon, and we have been down. So from that time frame there, the market again, we were not quite at the, we were actually at that pattern 5 higher high buy dot. We also put in a higher high buy at 5 o'clock from the time warp. From there, the market gave us a small pullback, and we've been sitting below the open price line ever since. We've never been able to get above it. That's usually a pretty good sign that there's going to be a problem because we're not able to get above that price level. The 15 says that if we go below here, which is not that far down, let's take it to right there because it'll be over by then. The 15 says that if we get below this price right here, if we go below 27.92 3/4, then we will be inverse. However, the closer we get to it and the closer we get to the moving average, the less the risk. So we'll see what the market ends up doing here. So 1054 or 1048 this morning off 1048, we're going to be looking for a push up into 320 this afternoon. So we do get a little choppy stuff there. This is going to be a single bar crossover coming in 1 bar before the signal. Let's move it to here. So we're going to be watching. Why can I not do that? That's very interesting. Huh. Fascinating. I bet you it's a drawing thing. Let's go disabled. Take it out of snap mode. I can put it where I want it, right? Why won't you let me move? There we go. Hateful. So we're going to be looking for the move here. We'll be watching 1040. Hold on, something's wrong. Something is incorrect. Let me reset this chart. Fascinating. Oh, huh. Sorry about this, guys. Somehow I managed to get a 16-minute chart instead of a 15. I kept looking at it thinking, you can't have a 1048 bar. You can if you have a 16-minute chart. I didn't want a 16-minute chart. I want a 15-minute chart. Okay, so we'll be looking for this turn coming in there and there. All right. All right, so up until here, up until 4 o'clock. Okay, so let's see what the ES is going to do there. Let's drop down to the 5 minute, and our 5 minute today. All right, hang 10 on the 5. 940 this morning, off of 940. Watch for the push up into 455 this after 255 this afternoon. So the back and forth stuff on the 5 minute for the next little while. 10 minutes after the open, we are expecting a major trend move to occur, and it is in the direction of the higher time frames. So the 5 minute says we just wait it out until 940. 940 is going to be our time on the 5. So yeah. Let's look over onto the warp, and on the warp, 940 is a sell on the warp. Fascinating. So we'll see how that one goes. If we are pushing into a pattern 4 at the same time, we may actually end up getting a long there. But 940 is going to be our next opportunity on the ES. As we come into 940, we'll see where the market is. If the market gets a breach of the dot, we're going up. So 940 showing up on the power zone for the buy for the longer duration trend move, and 940 showing up on the 5 minute here for the short term move. So looks like 940 this morning is going to be our next major turn time on these markets. Let me reset that chart. Something's wacky. There we go. It wasn't quite keeping up. All right, so let's see where we're going to end up continuing to go. So 940 today, watching for that move higher into 255 this afternoon. Yay. So 940 is going to be the time on the ES. So 940, and then again, we do have that sell. So we're looking for longs. We're currently just below the moving average. We'll also watch the ES today on the 30-second chart. I have it as a separate chart over here just because it moves so quick. And we'll watch and see what we can pick up on that 30-second chart for the ES today. All right. So there's our daily setup. So long on the indices, short on the crude. There's a continuation of that trade on the crude for the breakout. I got a few dollars off of it, and she's still going. Let's see what else we're going to get, guys.